I think 90% of people that are going to put meaningful capital into this space are the kind of folks that invest in ETFs. And the way that they're going to win is they're going to put a meaningful amount of allocation into a Bitwise fund that has the top 10 of blah, blah, blah into that ETF. And that's how they'll participate. It's very, very, if not impossible, to be able to find winners in crypto. Even if you're us on this show, it's nearly impossible given the schizophrenic version of this industry. So the way that people that have lots and lots of money have figured out how to do that. Okay, give me the ETF that's got everything in it. I'll put 1% of my portfolio in there, and let's talk about it in 3 years.
That's I think there's two things to comment on that. The first thing is that, in agreeing with you, is that cryptocurrencies are generally pre-seed and seed startups that are trading as public equities, right? And if you think about the amount of pre-seed and seed startups that are going to succeed, right, it's a fraction of a fraction, right? When you're an investor that invests in seed companies, right, you basically have to only invest in things that are, you think have the chance of being 100x's, because you have the expectation that 90+% of them are going to go to zero. And the only way that you can return money to your investors is if, some of these things become big successes. And I think you have to view tokens in that way once you start going down the risk curve. And it also depends on what your investment time horizon is. But I do think the fact that the market is starting to price in value revenue and real financial metrics is also going to make picking winners and losers easier in crypto. The one thing to note, though, is obviously, it was brought up earlier, which is disruption, right? In crypto, it's very easy to copy and paste, what somebody else has built. And so the ability for some of these protocols to be disrupted is higher, and their ability to build moats is lower. So that is something to keep in mind. But I do think that as the market matures, understanding who's going to win or lose is going to be easier. On the point of passive products, I will caveat one thing. I agree with you broadly that I think people will come into crypto via passive products, but I think the reason why passive products have to exist and have to be limited is purely a matter of liquidity. Like if you're BlackRock, you just can't launch a product for anything outside of the top 5 by market cap, because any amount of buying activity from your customers is going to just quadruple the price of the thing, and you're never gonna be able to get out of it. I mean, it's purely just a liquidity issue.
I agree. Depth of liquidity is what they manage more than anything. Price.
But what if they're indexed? Sorry, right? I agree with you.
It depends on how the index works.